Good morning. My name is Jane, and I've been with the Illinois Department of Revenue for 9 years now. Today, we're going to talk about the retailer's occupation tax, commonly known as sales tax. So this year, there were only a few changes to sales tax. So we'll discuss the grocery tax suspension, the state sales tax holiday. We'll touch on the 1099-K, and we'll review the level the playing field limits. Okay, so for the grocery tax suspension, July 1st, 2022 through June 30th, 2023, the grocery tax suspension suspends the state of Illinois portion of the sales and use tax on grocery food items. Grocery items normally taxed at the 1% low rate will now be taxed at 0%. However, the Regional Transportation Authority and the Metro East Mass Transit District will still impose additional local tax on grocery food that is not suspended. So what that means is if the grocery tax was 1%, the entire grocery tax amount is suspended in your area. But if the low rate of grocery tax was higher than 1%, the 1% would be suspended, but the amount of tax above the 1% that is due does not qualify for the grocery tax suspension, and the amount of tax due above the 1% suspended amount will still be collected and remitted by the retailer. So at this point, during the July 1st, 2022 through the June 30th, 2023 period, any foods that previously did not qualify for the 1% low rate of grocery tax do not qualify for the grocery tax suspension. And this information is found on our website, and you type in the administrative code 130.310. So the items that were previously taxed at the high rate were alcoholic beverages, soft drinks, candy, food consisting of or infused with adult use cannabis, food that has been prepared for immediate consumption. So any foods that did not previously qualify for the low rate of tax do not qualify for the grocery tax suspension. Tax will continue to be imposed on items that meet the definition of a qualifying medicine or drug. So prescription and non-prescription medicines and drugs are not eligible for the grocery tax suspension, whether they were previously taxed at the high or the low rate. Medicines are still taxed as they were taxed before the grocery tax suspension. So we have Fiscal Year Bulletin, or FY 2022-23 Informational Bulletin, answers the additional questions about the grocery tax suspension. This bulletin explains that the 1% state portion of the low-rate grocery food tax is not taxed. The bulletin contains two hyperlinks, PIO-115 and Administrative Code 130-310, and the hyperlinks advise which groceries are normally taxed at the low rate and are eligible for the 1% grocery tax suspension, and which are not. The hyperlinks also explain that the 1% of the low rate food tax is not taxed under the grocery tax suspension. Some Illinois residents live in areas where the food tax is higher. For example, 2.25 in Chicago, Cook County. So under the grocery tax suspension, the retailers are able to deduct 1% of tax paid from the total 2.25%. Okay, so we have the grocery tax suspension rate breakdown, and this is in our tax rate database. So the Metro East Mass Transit District, the Regional Transportation Authority, and other additional local taxes on grocery food are not suspended under Public Act 102-0700 and are still due. In the Illinois Department of Revenue's tax rate database, the amounts are broken down so you are able to see where the tax money is going. So if you go to our hyperlink and click on the rate, the 2.25, it breaks it down into where the taxes will be appropriated. So the 1% state rate would be suspended during the grocery tax suspension. The additional 1.25 RTA tax is still collected and submitted by the retailer. The Schedule GT is used to report and deduct taxes deducted due to the grocery tax suspension and the state sales tax holiday. The ST1 is completed as though all taxes were collected, and the early filing discount is honored. On the Schedule GT, deductions are taken. The 1% deduction for the uncollected taxes due to the grocery tax suspension and the 5% deduction during the state sales tax holiday are taken using that Schedule GT. To report and deduct for the grocery tax suspension, so that's July 1st, 2022 through June 30th, 2023, first complete the ST1, calculating all the taxes that should have been collected. Schedule GT is then used to deduct the 1% taxes that were not collected due to the 1% grocery tax suspension. Grocery tax suspension figures come from the ST1 and are deducted on lines 6 through 9 on the Schedule GT. The Schedule GT also is where you deduct the state sales tax holiday figures, which at this point would only apply to the annual filers. So from August 5th, 2022 through August 14th, 2022, last August, the Illinois Department of Revenue suspended the 5% state portion of the sales tax on back-to-school items. The state sales tax holiday 5% deductions are computed on lines 1 through 5 on the Schedule GT. So at this point, the state sales tax holiday information only pertains to the annual ST1 filers, businesses who are only required to report and remit their sales tax annually. Otherwise, everyone else would have already filed. The total tax originally due needs to be computed on the ST1 as the Illinois Department of Revenue remits the total tax revenues without the discount to the municipalities. In other words, the total tax amounts due before the grocery tax suspension and the state sales tax holiday are remitted to the municipalities by the state of Illinois. And the retailers are required to have this phrase printed on all the cash register tape from July 1st, 2022 through June 30th, 2023. The state of Illinois sales tax on groceries is 0%. Okay, next we'll talk about the 1099-K, and this is new this year. The 1099-K is an IRS informational return used to report certain payment transactions and to improve voluntary tax compliance. The 1099-K information, and questions and answers can be found on the IRS website. If you've received payments in a prior calendar year, you should receive your 1099-K by January 31st. This pertains mostly to marketplace sellers using marketplace facilitators. A marketplace facilitator makes retail sales of tangible merchandise through a physical or electronic marketplace. Examples of marketplace facilitators would be selling through eBay, Etsy, Facebook Marketplace, or Amazon third-party sales. Okay, in Illinois, we have the informational bulletin FY 2020-14 or fiscal year 2020-14. And in Illinois, the 1099-Ks must be filed electronically through the Illinois Fire Electronic Transmission Program. They cannot be submitted using MyTax. And if taxpayers use third-party software to submit the 1099-Ks, be sure to obtain proof of filing. Some third-party services only create the file, and then the businesses must submit their own 1099-Ks. So you want to have the confirmation that they were submitted. There may be a $5 penalty assessed for each 1099-K not transmitted electronically. If the 1099-K is issued to a payee with an Illinois address, and you are required by the IRS to electronically file Forms 1099-K, then it must be filed through the Illinois Fire Electronic Transmittal site. And publication 110 has hyperlinks that link to the tax.illinois.gov, the Illinois website, the Illinois Department of Revenue website. It has a link to the Illinois Fire Electronic Transmission Guide, a link to the W-2 and 1099 electronic filing program page, and also the fiscal year bulletin FY 2020-14, new Illinois electronic filing requirements for issuers of 1099-K forms. Okay, and then we're just going to review the level the playing field thresholds. Okay, so level the playing field tax remittance thresholds for out-of-state retailers or retailers who sell into Illinois if they have $100,000 in sales into Illinois or 200 individual transactions in Illinois. The retailer must register with the Illinois Department of Revenue and collect and submit sales tax on all Illinois sales. And these are the sales tax resources for everything that was discussed today. And I'm ready to hand it over to Dan or answer questions.
I've got one question here.
Peter, if you're speaking. Okay.
Yeah, I'm speaking. I've got one question that I was actively typing while Jane was finishing. But I think it might be easier to just answer this question verbally. Got a question that for sales tax, if a business makes purchases tax-free and makes sales collecting sales tax, they have to file Form ST1 for both purchases and sales. It's there's probably a lot of complicated things to whether this question is meaning that the purchase and the sales are on the same items, but assuming that they are, this is normally how all retailers in Illinois are going to be making their sales. They will purchase their items tax-free. Those purchasers generally do not have to be reported on the ST1 form. What they would report, though, is those sales, because that's what they collect the retailer's occupation tax on and pay into us on the ST1. So I'll be putting that in writing and answering that in the Q&A chat as well, but I just wanted to make it clear that there could be a lot of nuance in there.
Thank you, Peter. And
yeah, I will pass this. Oh, go ahead.
Much of the 1099-K information is answered on the IRS website.